As I call my panel on stage, I am told that the governor is pressed for time, so Governor, we will understand if you must leave at this point or further down the road. It is to your discretion. Thank you so much. Let's appreciate the governor one more time for joining us this morning. We have to release him to attend to other duties on his schedule. Asante sana, and to the larger CBK team for being part of this. That sets the stage for our panel conversation this morning, and that conversation is on MSME policy and monetary dynamics, implications for financing, lender opportunities, and barriers. First of all, my tech team, I need microphones at the front here. Meanwhile, let me call on stage Madam Tamara Cook, CEO FSD Kenya. Let's appreciate her as she joins us here. Let me call on stage Felix Ndunda, Kenya National Federation of Jua Kali Associations. Please join us. Mr. Jared Osoro, economist and member CBK Monetary Policy Committee. Please join us on stage. And finally, Moses Nyabanda, MD Equity Bank Kenya. Karibu sana on stage. You know, panels are meant to be conversational, so that's why we arc the seats that way. Are we getting more mics? All right, I can see 2 so far. All right, it looks like I will have to use this one. Just cut the music, please. Thank you. My panelists, because of time, we will make this more of a quick fire and less of a panel. So we'll be whipping through the questions in a very first manner because of where we are with the schedule. Maybe let me start from, because we're talking about MSMEs, let me start with the Federation of Jua Kali Association. Bwana Felix, what is the experience of the association's members in accessing credit, loans from the banking sector?
Yeah, so thank you very much. My name is Felix Ndunda from Kenya National Federation of Jua Kali Association, in charge of membership and youth services. So one of the challenges that our member organization face when it comes to access to finance, especially with the formal banks, is the issue of collateral and also the issue of credit ratings. Because you find that most of the formal banks look at the informal sector as financial risk. But there is where it lies the opportunities. And also some of the products that the formal banks have, they have a mismatch with what the formal sector members require. So those are some of the challenges that we face as the informal sector.
If you noticed, I asked him about the experience, and he straight went for the challenges that they face, which is very interesting. And that's the story of MSMEs. Now that we've heard from the MSME side, let's hear from the banking side. Bwana Moses, you're being told essentially you're too much focused on collateralized financing, and majority of the players don't have the assets to go that route.
Thanks, Julian. Thanks, Julian. What Felix has described is a challenge as the banking industry we have to rise to. The traditional banking setup was built up out of a collateral model. But hearing the statistics that even Raymond mentioned this morning, that 98% of our businesses are SMEs, the ballgame must change, Julian. And in here is then how can we use as much data, and we're in an age where data is very much readily available for us, to deeply understand the kind of borrower that's coming in. And banks have a challenge right now to ensure that we're able to mix a lot of the data. Your spend on what you spend on Safaricom, what you spend on your POS, the transaction flow that you do have, should be very rich data for us as banks then to look at. Then what's your credibility as a borrower? Because every time a bank, I guess, goes through a lending process, they want to understand credibility. There's been that shortage of information. So information asymmetry, everyone defaults then to, let me cover myself using collateral, and that's where we found ourselves. We need to ride on the wave of the information age and use as much data points around an individual as possible. Related to that, Julian, is then how do we also support the SMEs to capacitate themselves? I think we have a moral obligation as banks to ensure that we do walk with the SMEs the journey. Do we need to help them strengthen their governance? Do we need to help them make a better pitch? Do we need to improve on financial literacy around them? If you combine all those together with various data points, then the need for collateral reduces. And I can give you an example. A lot of our agricultural clients, and equity is big in agriculture, we're able to figure what will be your estimated yield, for example, for tea or coffee. Where are tea prices at this point? And I'm happy to give you a haircut on what my estimated is and lend you based on what's the estimated output that you expect. So there are various innovative ways that banks should be able to come in.
Thank you very much, Moses, for that. Now let's hear from an external party, and that is FSD Kenya. You do a lot of research on this space, on formal financial inclusion. Where are the pressure points? Because as you've had, collateralization and listing on credit reference bureaus is a big problem for MSMEs.
There's so many statistics I could bring out, and I really appreciated the governor referencing the FinAccess survey and some of the data that was already included there. Because we're in a room with banks, I just wanted to start with one statistic, which is that according to FinAccess, for those people who say their primary livelihood is business, only 35% of them even have a bank account. Far fewer have a bank loan. And even though 35% have a bank account, only 6% of them actually have a business bank account. So they may have an account with a bank, but is it recognized that this is a business? You've heard mentioned that many of us were at the guarantee scheme breakfast this morning. And one of the challenges when that was first launched in 2020 is the requirement was for a business to be guaranteed under that scheme, they had to be registered. And we know so many businesses are not registered, and men are much more likely to be registered than women. And so I think, if we look at I like what you said about data, and it's really important, and part of that data is the credit reference bureaus. I've been in 2 events over the last week around that credit information sharing mechanism, and it's really important that we change the narrative that the credit reference bureau is not about blacklisting. It's about collecting data on good performance of loans and enabling that data to be used to qualify people for better loans, longer term loans, and cheaper loans, as we also heard as another policy objective. Maybe I'll stop there.
Thank you, Tamara, for that. So we've heard from the players, but we have the central bank still with us. And Jared, you have vast experience in supporting credit markets, and not just in Kenya, at a continental level. It seems from what we are hearing that there's a decoupling in the sense that MSMEs are saying you are frozen in time in terms of the lending models. We have new approaches we think you should be able to deploy to extend credit to us. Where do we stand from a credit market standpoint?
Thanks, Julian. And that's a very tough one because it's a cyclical thing. So where to start is difficult to say. But let me just say a few things that can give you a perspective on how the credit market, especially in the context of SME, is shaped across many markets, including Kenya's market. The first is to acknowledge that there's no market that is perfect, and that's a reality. And those imperfections are even more when it comes to the credit market. Now, when it comes to some of the attributes of those imperfections, there are 3 things that come out easily. The first one is that typically in bank-led financial ecosystems, even though, as we had earlier in the morning, that many enterprises are actually SMEs, there's a deliberate leaning of credit towards the big corporates. That's one imperfection that declares itself. And then, of course, on the back of that is the fact that there's an element of market power that plays out both on the demand side and on the supply side. Let me give you an idea of how the demand side looks like. Now, if you have corporates that are able to attract, not only access to credit, but also in competitive terms, that usually comes almost at the expense of looking at SMEs as an avenue for credit. That's just one side of the market power. The other side of the market power is where now the lenders themselves view their portfolio to be much more profitable from a cost standpoint by leaning more towards the big corporates. So that is an imperfection that I think glares itself in many of the markets that I see across the continent. The other is really this idea of talking about SMEs without acknowledging the fact that they're not homogeneous. Yeah. There are some SMEs that you can't distinguish them from the owners, and they're at a very young stage of development. Those SMEs, and as Tamara and others will confirm from the numbers, are accessed more by access to credit than the cost of credit. So when you hear people talk about SMEs are constrained by lack of funding, then you probably have just lumped the problems of SMEs together. As you graduate, as you become bigger, then the issue of cost becomes an issue. That's another imperfection that actually arises because we tend to assume that SMEs are just the same. They're not homogeneous across markets. And the final one is around the issue of in the event of a shock, when there's a market shock, and that shock reveals itself in the quality of the assets in the financial system deteriorating. It doesn't matter whether the quality of deterioration of the quality of assets in the financial ecosystem is arising from SMEs. What you tend to see is that credit to the SMEs stop flowing. There's what you can call almost a sudden stop. So those are the kind of imperfections that you see across many markets in Africa when it comes to SME financing. So that if you want to address their problems, then you have to start looking at the idea of market power, the idea of the non-homogeneity of the SMEs themselves, and what happens when there's a market shock. And I think that's really how a conversation around meaningfully intervening in SMEs requires you acknowledging that that's where the pain points are.
So clearly we can't use a broad brush to paint everyone in the landscape as MSMEs.
Precisely.
Let me come back to the Juakali Association. Now, banks always raise this issue with me whenever we have the conversations, and Paul did mention in one case that even if we wanted to support MSMEs as much as we want, when these guys come to us, their books are not in order, or they are not existent at all. So that is flagged as a challenge from the banking side towards your side. Is it a big problem? And as an association, what do you do to support your members to get ready for banking financing?
Thank you very much. Yeah, that is a very big challenge, and that calls for also the banks to have a strategic partnership with MSMEs. And I can proudly say, as an organization, we have an MOU with KCB Bank, whereby such kind of financial literacy are able to be extended to our members. And through that, we're able to see some of our members being able to access some of these credit facilities through banks. I can happily say that right now we have our members accessing some credit facilities through KCB Bank called retailer financing, which lowers the requirements, especially when it comes to collateral. And and that's what I'll call on banks, is that also banks should have a targeted market proposition, especially when they're dealing with MSME, so that even when they're coming up with products, they're co-designed with MSMEs, so that even when there's a difference when your books are in order and how to access those finances. Because some, they have their books in order, everything is okay, but still when they come, there are some bottlenecks which hinders them. So even as we progress with this conversation, also banks will come up with very practical, sustainable, and impactful solutions to the MSMEs, especially MSMEs run by the youth, because that's where the really big challenge is.
Moses, hearing what has been said here, is there a product design market fit mismatch in terms of how banks are targeting MSMEs?
Thanks, Julian. And just reflecting what Felix has mentioned, and Jared in terms of also the stratification. I think at the earlier stage, the only thing you can rely on is data. And the easiest way to support those businesses has to be a combination of two things: capacitation and hopefully driving lending in a digitized way. Because that way, then I'll be able to collect data much quicker. So I can start with you, Felix, small, and build you up. So I don't need to ask for your books. I can just look at your repayment schedules, where we started, how your business is growing. And with time, as we work on capacitation, then we're able to build a product for you as you get to mature. For the next category of SMEs, then these are probably established businesses, then we have to look at it a little different, because there you need to figure, how do you credit score? Credit scoring has to also change. We've traditionally looked at monthly repayments, what's coming through. That doesn't work for SMEs. We now have gig economies where flows are like this. So again, it takes quite a bit of effort for us as banks to set up systems that are able then to capture that. Then we are able to design something. If we leave it as it currently is, we probably won't be able to cure what it is we are dealing with today.
Tamara, I'm sure you want to chime in on that point of books, readiness, and how we design solutions for MSMEs.
I wish I had all the answers on that. But I think it is interesting that I told you 35% of businesses have a bank account. Only 35% of them keep records. And so I don't know if it's the same 35%, but I bet it may be. We also see that only 18% of businesses have a pay bill or a till, and that's one of the ways to create data, right? You were saying if you can digitize the payments, it helps digitize the data, and then you're more able to credit score. You know, when we ask through FinAccess banks or ask individuals who own businesses, why don't you have a bank account? One of the things they say is, I can't afford it. The other thing that they say is, banks don't have products that meet my needs. And we see people who have never banked say that, but we also see people that used to bank and have left banking because the products don't meet their needs. And so I think what Felix was talking about and others is not having kind of a standard vanilla. They're not monolithic, right? Being able to have flexible products that allow flexible repayments, flexible, understands those dips and business cycles. And so I think that's one of the options. I also think there's policy changes that could be made. So since we have central bank represented, and it's good to have central bank in the room, one of the conversations we just had was around guarantees. Guarantees are something that can unlock finance for MSMEs. But if a bank still has to do 100% risk rating for that loan, it's not going to unlock it in the same way. Also, traditional collateral, you're allowed to kind of do a lower risk rating, but maybe movable collateral or other types of ways of kind of thinking about that loan, the banks don't have the same ability to reduce that risk. And so it's good to make changes on the policy side that make it easier for banks to lend. And also it's important to look at the data to understand what are the needs that MSMEs have for this more flexible, affordable type of financing options. Thank you.
That's a good way to segue to Jared, because the question then is, what reforms from a policy perspective will then act as a catalyst for roping the MSMEs into the formal financial market?
Okay, I think I'm glad we're in a room full of bankers. It's first to acknowledge that banks will play a very critical role so far as lending to SMEs are concerned, but they're not the only game in town. The financial ecosystem that speaks to SME and lend to SME is bigger than banks. So the reform is really to make sure that you have a system that looks across the entire financial ecosystem to include the non-bank lenders into the free of SMEs. Because when SMEs say that, the banks don't understand them, and that's what probably I heard from Felix, that sometimes they don't understand them, where do they go to? They probably go to other lenders. Some of those lenders may be having challenges, including, the need for them to reform. We see the space of digital lenders who could be giving money to SMEs requiring reforms. So acknowledging that, there are other institutions that complement lending to banks is one of the areas that I think you have to start thinking about. The second is really to know that, reforms are continuous. So you experiment with reforms and see how that supports the SME lending and how that will enhance the portfolio growth. But it will not be complete if you think about the reforms only on the lender side, on the supply side. There has to be reforms on the other side also, from the demand side. How are the SMEs operating? Is the environment around which they operate conducive for them to meaningfully have what we can call effective demand for credit? Because when you hear people talk about SMEs are not being lent because they don't have collateral, we've already jumped a step. A bank is going to lend to you not because you have collateral, but because you have a business proposition, and therefore effective demand, and therefore collateral gives the lender the comfort to be able to lend. So there's a reform that you need to think about on the demand side that I think are going to be very critical. But I think many of those reforms cut across many areas. The information infrastructure, people are talking about data. How readily available is it? What quality of data is it that is going to support lenders understand the business they're lending to? And then, of course, there's what you can call the incentive or their lack of to formalize the SMEs. If you have a system that disincentivizes SMEs from formalizing, then I think you're robbing them of opportunity to actually access more credit from the financial ecosystem than they actually do right now. So I think when you're looking at the reforms, continuous, look at it from both the demand and supply side, and look at it in terms of how comprehensive it is in terms of covering the entire financial ecosystem, acknowledging that there are other lenders beyond banks that are in the space.
Jared, jeez, what happened? Allow me to push back on that point on effective demand, because I was having a conversation with the MSMEs and they raised a very interesting point, that there's a peculiarity in the Kenyan market. Whereas you can justify that you have effective demand for your business through invoices, the invoices will not necessarily translate into cash flows, because we have other challenges in this market and you know about them, pending bills, etc. So how does the banking sector then take cognizance of this, Jared? And really just your thoughts on how that can be factored in.
I look at it from a very basic standpoint. Effective demand means you have the ability and the willingness to repay the loan. You could be having an invoice that indicates that you could actually be able to, pay in the future when that invoice is ordered. I believe banks have structured products that recognize invoices as a comfort for them to be able to lend. But if that invoice is not paid, and the history of some invoices not being paid, then in that instance there's no effective demand. So I think it's a case of acknowledging what truly is effective demand to avoid a situation where there's the moral angle that Moses talked about, but that not translate into the banks realizing the returns out of lending to SMEs or building up into what you can call low quality assets that go into that space. I can give you an example of the kind of things that needs to be considered when you're thinking about effective demand lending to SMEs. Think about SMEs in the agri space. There's a study that was done by the World Bank, Kenya Forecast in 2019 on agribusiness, and it was actually ascertained that in terms of the pain points of agri SMEs, lack of credit and the cost of credit is number 5. There are so many other things up there that needs to be considered, including do you get support at the production level, extension services, these public good-oriented things, infrastructure, post-market support that makes you be able to meaningfully run an SME as a business. The fact that you own a piece of land and you're able to plant crop does not necessarily mean that you have effective demand for credit. So I think it's how you look at what effective demand means and how that fits into the kind of demand and supply kind of attitude you have towards the reform that I've already alluded to.
Okay. I have one question before I invite any questions from the floor. So after this round, just be ready in case you have any. You'll shoot up your hand, introduce yourself, and throw your question. How much is pricing or the cost of credit a pressure point for SMEs in accessing credit? Let me start with the Juakali Association, then we hear from FSD.
Yeah, I think one of the hindrances is the high cost of credit, especially when it comes to the MSME. And that's what edges out MSMEs, especially when it comes to growing up their business. And this issue of financing to MSMEs, I think is a conversation that takes two to tangle. And maybe I can go back to my earlier statement is that we really need to work with the financial partners, especially the banks, to see how do we come up with products that really target MSMEs. Because you see, there's a difference when you say SMEs and MSMEs. Many people fall under the category of M, which is the micro. And that is where so many of the likes of myself are edged out. And that's when banks have intervention, they really don't have that impactful to the MSMEs. And that's why, and what Moses has just alluded to, is that when you come, for example, to the gig economy, you find that, if you look at a young man who is in the gig economy, their bank statement is not consistent because, business is not consistent. So I think going forward, also banks should assess someone as who they are and see how they can be able to help them progress and build their business. But if we continue with the same good stories, many micro will still be having these stories 10, 15, 30 years to come. Thank you.
Tamara.
It's a complicated question because, the cost of not having a loan can also cost somebody a lot. And so one of the things that we see is that banks will say, well, they were willing to pay that high interest rate, so it's okay if it's a high interest rate. But they're willing to pay it because the alternative is not buying and then not selling and then not feeding their family, right? And so I don't think that we should use willingness to pay as an indicator that the price is okay. But we do know that speed and convenience are really highly rated by MSMEs. I think also as we think about the price, it's about matching it. It's not, so when we ask people, why don't you take loans, affordability is one of the issues, but affordability is a complex topic because they're saying I can't afford it every month or I can't afford it this month. And so really it goes back to that flexibility of being able to pay things over time. I appreciated the governor mentioning this morning, and sorry for the tease to the banks, you raise your rates quickly when our rates go up, but you don't decrease them. And I was in an event with one bank who was engaging with their female MSMEs in the audience, and they not only asked this kind of a question, they said, we've seen how much money you made last year. Why aren't you paying us more on our deposits, and why can't you cut our interest rates? And I really loved that the MSMEs in that room were able to really be sophisticated and say, we want to partner with you. We're willing to pay for the services that you give us, but we want to kind of share this a little bit more. And so I thought that was, I won't say which bank, but it was a lovely conversation.
Jared.
Let me just, maybe this may sound a bit controversial, but I'll say it nonetheless. Obviously, the cost of credit is an issue to SMEs. But let's just do a thought experiment. Assuming an SME with a myriad of challenges because of SMEs being what they are, is assessed by a bank, and because of those challenges, they're not being given credit. Where does that take you? It takes you to a point where even if interest rates were to be very, very low, that is not going to make an SME qualify to get credit. I'd rather this SME is assessed, and that's why we have this called risk-based pricing framework. The risk is acknowledged and actually quantified, and therefore used as a mechanism of saying that if I'm going to lend to you, this is where I think your risk is, so you will access the funding. As opposed to an SME saying, I'd rather not get the money if the interest rate is not at single-digit level. So I think cost is important, yes. Interest rates is important, but I think it should not be seen as the main pain point for SME. It should be seen in totality of so many other things coming into play. And that's why I say it differs what type of SME you are. Some are constrained by access, mere access, and so they don't lose a business opportunity. Others now, as they grow, then now the cost becomes an issue. So I think it's not as straightforward that, it's cost and therefore that's the main thing. The other thing is really to step back and ask yourself, when it comes to SME, why do we have to assume that the only funding type that they can get is credit? Are there other funding avenues that I think the SMEs can benefit from? It's a question that people can answer in the room, but I think funding should not necessarily be seen automatically as credit. And finally, some SMEs actually don't get financial credit. You can get suppliers credit and then you're able to do business. The issue is, what is the opportunity cost when you get credit that's not necessarily financial? It probably ends up being more expensive. And those are some of the dynamics in terms of credit that you need to consider, as opposed to narrowing it simply into an issue of price.
Moses, your thoughts on that issue of pricing?
Yeah, definitely a very topical one in the last couple of months. Why have, I guess, banks struggled to get rates to where, I guess, the expectation, and you've had the challenge from the governor? One of the bigger issues that we need to come, I guess, as a country is the data asymmetry. If we get that right, Julian, I think it's a big way to move. Whenever we, at Equity, we capture guys from a refugee, for example, almost at the most bottom. And our work is to figure, how do we capacitate you, bring your literacy to a level where you become bankable? Because there's a portion in your where you're not bankable for real. You probably will rely on friends and family, you'll rely on a shopkeeper, you'll rely on the invoice financing. It's how do we build our data sets across this so that when I'm pricing for risk, and it's good the conversation now is around risk-based, I can truly assess you. Right now, I can tell you majority of banks, we've bucketed people. Micro, you'll be at the highest loan price, irrespective of who you are. Your business size is ABC. If another one, you're a startup, same specs, you'll be bucketed the same, irrespective of the opportunity. The people who pay the least are the people who have the best information. So if I have a blue chip, they'll most likely play the least. Yet, in true sense, the risk profile may not be the same. I could have a very guaranteed cash flow arrangement, which makes my business probably even less risky than that blue chip. So we need to sort information asymmetry.
Thank you, Moses, for that. Any questions from the floor? I'm happy to take 3 quick ones and we transition into the next because of time. There's a hand. Do we have roving microphones? Yes, please. There's a lady at the extreme end. Please introduce yourself, to which institution you're affiliated, and just shoot your question. Or comment as well. Any other apart from that one? All right, that will help me redeem time too.
Yeah, good morning. My name is Geraldine Lukanya Makunda from FSD Kenya. And it's a hard question back to Moses Nyabanda. So we have this thing, the We Finance Code, where we're trying to get all the data for MSMEs sitting together. And I know that's a question you're asking. But my question back to you is, what ideas do you have that can make this work? How can you deal with the information asymmetry? You know, everything about the MSME, all the data around their, whatever you said needs to come together. Thanks.
Moses, before you respond, I can see a hand here. Let's just take a batch of questions and we close it there. Here, right at the front here.
Good morning, everyone. Okay, I'll just make a comment, an observation. And I like the approach of Mr. Osoro, looking at both the demand and the supply side. Over time, as banks have attempted to resolve this, they've poured a lot of money into SMEs on an unsecured basis. And they've actually picked huge losses which become unsustainable. And to me, that is the question we need to answer. Because over time, as the bank shareholders put in money and picking losses, then they tend to share away for putting in more money. In the meantime, the SMEs are stuck at the corner. And that's a structure that he's talking about. How do we address the demand side so they can also come to the table and make themselves lendable in a sustainable manner?
All right, let's take those two. Moses is a question, then there's a comment, Jared, on the demand side, and how do we address that issue?
Geraldine, we've been favored by where we are technology-wise. So I'll tell you what we're doing at Equity Bank. We have 14 million customers at Equity Bank Kenya. For the first time, I've been able to put all that information in a data lake. And there's development now of new credit scoring tools to enable me capture a lot of the nuances that previously I never used to have. And I believe by the time we close this year, we'll have probably a better profile of majority of our customers just using the data we have internally. We then need to figure out what other data sets sit outside the bank that may be useful for us. Will that be data set that individual customers share with us? Is that data set that we'll get from external sources, including where Tamara sits, etc.? With that, then I'll be in a position to have a fairly enriched data source that I can then start even enriching individual customer profile. Previously, it became very hard to have data set for an MSME individually. I could have it at a corporate level for corporate business because I gathered that data. I had systems to do that. On the mass side, that was a real challenge. But we are now in a position where clearly we should be able to achieve that. And hopefully it's a very different story next year as we look to do this. And I loved that the new risk-based pricing came in because it has pushed us also to figure out how do we do this thing at an individual level. Thanks, Gerald.
Thank you. Jared.
I think I'll just comment on the demand side a bit, and I'm tempted to jump in on the data side also. I think it's a fair comment to make that there are real serious issues on the demand side. The focus has been more on the supply side. Now, if you have observed the market and the interest that the SMEs have attracted, for a very long time, commercial banks have been attracting resources from DFIs, lines of credit that are dedicated to SMEs. And many of those lines go unabsorbed. The absorption challenges are real, not because the banks don't want those resources, but the demand side is a problem. And that speaks to how the focus has to be balanced between reforming the banks so that they can be able to address SME issues, but also looking at some of the things that actually make the SMEs themselves not access the resources that are dedicated to them. And that's the point that I'm making, and I think it's a fair point to make. So who is going to champion the demand side issues? Of course, the banks have a role to play there because that's a customer base, but there's also a public side to things. Other initiatives, be they of policy nature, be they of financial literacy, whatever you want to call them, so that you acknowledge that there's a demand side issue that actually will not make this story around funding SMEs be complete if it's not addressed. Now, on information asymmetry, you're obviously not going to have perfect information. It's actually enabling the lenders to have information that makes them comfortable that they understand the people that they're lending to. That's the only way you can look at how to bridge that information set. I know everybody's talking about artificial intelligence and all that. I think investing in artificial intelligence so that you don't have to rely on information that you collect in a certain way will help in terms of bridging that information gap that could be existing. Then you start seeing maybe that information supporting the appraisals of these SMEs and avoiding pigeonholing the SMEs into brackets and then seeing more credit flowing in that space. So it's a journey. But I think acknowledging that you can use technology to harness information and complement the information that is already available with the banks and elsewhere.
Thanks, Moses and Jared. Let me quickly invite my panelists to give me their closing thoughts because we have to transition to the next. And let me start with Felix, then I come to Tamara, then Moses, then Jared.
Yeah, so thank you very much. So I think this issue of MSME financing spurs grows outside this room because also it entails, people like KRA. Because why am I saying that is because there's a time whereby many MSMEs removed their pay bill and buy goods on their businesses because they were told that, KRA will come and collect, taxes or everything. So I think it takes a lot of collaborations to be able to help MSMEs grow from where they are. And for me, I think this is just a start of a conversation together with the banks. And one thing I want to call on the banks is that even as you're doing your strategies and the risk assessment, first of all, have a conversation with MSMEs to get to understand where they're coming from and how do you collaborate going forward. And maybe if I just say something on what the lady said about MSMEs, banks, churning out a lot of finances, but in return they go on losses because banks have not, where they are losing it is because there is no proper collaboration with SMEs. So even when you're channeling out your money, there is no clear proposition where you're channeling it and how will be the impact going forward. So I think as we go forward is let the banks come with a strategic and sustainable and practical ways in helping SMEs. And I can say as an organization, we are in the forefront. Actually, I'm one in the program where KBA is doing is called the Nuka Accelerator, just trying to sharpen the skills of SMEs. And yes, so I think this is a start.
Thank you. Tamara?
I think my parting shot is really about the theme of the conference. It's about navigating risks and leveraging opportunities. And I think that's really highly related to the concept of financial health. You heard the governor say that financial health in Kenya has fallen to only 18%. For business owners, it's slightly higher at 25%. But the reason it has fallen so dramatically, especially for business, is that their ability to invest in the future, invest in those opportunities, has shrunk. They're so busy trying to get by day to day and dealing with the shocks that are coming their way that they're not able to take that long-term view. And so, if I had a magic wand, the one thing I would do is create financial solutions that are collaborations between the MSMEs and the banks to identify these solutions that can help MSMEs invest in longer term future opportunities. Thanks.
Thank you. Moses?
Thanks. We have a twin problem that we have to deal with: credit risk and demand. Jared has said quite a bit. If we tackle demand, a lot of the credit risk issues disappear. And I think as a country, as an industry, we need to figure how do we tackle the demand issue. And the demand issue boils down to productivity and the markets. If our markets are not available, are our neighbors' markets available? We go back to the basics to drive productivity. When you and I grew up, productivity on things like agriculture were probably at the highest. All those have come down. So we have to tackle those two.
Jared, your closing thoughts.
Banks are looking for opportunity. SMEs are looking for opportunity. There has to be a convergence, and that convergence has to be appreciating the risks on both hands, measuring those risks. There's a science to it, but there's also an art to it. So I think it's a case of how those opportunities are aligned so that they benefit each other, and the economy consequently benefits. I think that's really my parting shot.
Thank you very much. Let's appreciate the panel for their insights on this topic. So the takeaways from here are: one, co-creating solutions. Banks, MSMEs, let's sit together in a room, have a conversation, and co-create products which actually speak to the needs. Two, pricing is not an end in itself. There is a whole ecosystem around it which affects the question of credit, and the demand side is something we need to talk about. Two is data asymmetry. We need to look at it, find the friction areas, address it, and unlock credit. And finally, is that we are all scouting for opportunities, whether banks or MSMEs, and therefore, let's find the concentric area and be sure how we can take this forward. Once again, let's appreciate the panel. Asanteni sana. And rise for a photo, please. The cameraman, this is right here with us. Let's take that quick shot. And then we shall have gift appreciation from the Kenya Bankers Association, handed by the Vice Chair, Betty Korir, to each of the panelists. A step to your right, please. Yes, there. Let me invite Madam Betty Korir to come. Oh, sure. Please, come and take another one. Let's have an appreciation to the panelists presented by the Bankers Association. That side, please. And that's the final one. Thank you very much. Asanteni sana. Please, you may resume your seats and of course watch your step there.